Yo, YouTube, how you doing? You could be anywhere in this world, but you're right here with me. Looks like we're gonna do a little something different today, and I'm actually gonna do an analysis by myself without Dave. Dave is here in my spirits, in our spirits, I should say. Um, so yeah, this is a cat yen. We've been breaking this down all last week, and it's been treating us well, I could say. So I'm gonna start with what we do in the beginning of every clean chart, and that's mark up some key levels. You got one here at the 78. Got another one here at the 75. Dun, dun, dun. And then we have another one here at the 80. Let me go ahead and fix that real quick. Dun, 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 dun. Oops. 80. All right. Then we have another one at the 78. And last at the 75. Now you don't have to mark up every key level because I'm sure 77 is a key level and also 76 has a couple touches, but you just want to do the main ones in which you see the most touches. Um, this one has been touched multiple times. This one as well, one, two, three, one over here, and then this one down here. I'm sure in the past has been touched many times. First thing I see right off the bat is a tie range, which is this range right here. And then I notice a nice little trap here. Now, how is this a trap? You have short sellers wanting to enter to take a nice little short and take profit at this bottom range, right? Now, if you put yourself in the position of these short sellers here, where do you think the most logical place to put their stop loss is? It would either be right on top or on top of this structure over here. Sorry about that, guys. Now this right here is what we call a supply. All right. Now this is a nice little V stop. This happened so quick. These guys went short, and in the span of 3 or 4 days, for those who took, it looks like a 101. So those who short here, yeah, looks looks to be about 101. Uh, 1 second here. Yeah, keep in mind that we're out here to make money, so it's logical that there's traders looking for one-on-ones. Um, yeah, so that's shitty for those short sellers there. All right, so now if we zoom in, well, first of all, before we zoom in, I want to let you guys know to get an idea of like what's happening, what orders are being collected. So if you're selling in the market, the moment you put a stop loss, your stop loss becomes a buy order, meaning it's a willing buyer. So if people are trying, let's say small hedge funds, financial corporations are trying to transact and uh, sell the CAD compared to the yen at the best price possible, they need to have willing buyers. So for those who are shorting, their stop losses become buy orders, aka willing buyers. So in order for them to transact, they need to push price to where there's willing buyers available. And because there's willing buyers available up here, they push price up here. They were able to transact, and we have an idea that buy orders are being collected, right? Are being collected. Sorry about that. Gotta stay away from being on drawing mode. All right. Now, if we go ahead and zoom in, let's see what's happening on the smaller time frames here. This is around the area where we posted our breakdown last week, and we were hoping for some continuation to the upside, knowing that there is money sitting up here. None of these highs have been invalidated, so we can safely say that there is some moolah sitting up here. And remember, understanding that big boys are trying to collect buy orders, you have to ask yourself, where are the willing buyers? And we know clearly there's willing buyers up here, right? Let's go ahead and zoom in into the 15-minute chart. And now I'm just going to go ahead and draw out a couple of things that can add to my bias that I am looking for a buy. So this is the confirmations that I look right before I take a trade. So I look for as many. So the more you have, the better. First thing I notice right off the bat is a nice break of structure. All right. Next thing I notice is an impulsive move right about here. And then the next thing I'm looking for is a range. Now the range is right about here. Next thing I see right off the bat is, actually let me mark this down. Range, so you guys can see exactly all the things we look for. Now all range does is it just builds more liquidity, and all it is misdirection. There's not really it's not really showing you exactly where it may be. It's just bouncing back and forth between a range, right? And all the market makers are doing is they're creating an illusion of misdirection. People are getting jerked around from their trades. What we call this is dumb money, just because these are low probabilistic trades that traders are entering between ranges, and none of that in the long term makes you a profitable trader. Fortunately, I learned that firsthand before I started looking for these confirmations. And I'll just tell you that it's a very oversimplified method of trading, and it just doesn't make you money in the long term. All right, so we have an impulsive move. We have a range being built. What else do we look for? Well, we know that we are looking for trap traders, because trap traders will move the market. You guys have to understand that for the typical retail trader, like, the market isn't made for us to make money. I'm a retail trader, right? Most of us are retail traders. So we have to understand that um, the market is just a transfer of funds from the patient to the inpatient. Um, from the inpatient to the patient, I should say. I'm sorry about that. And the moment that you see liquidity building on one side, you have to ask yourself, like, what orders are being collected, so I have an understanding where the market's to go, right? Because if having an understanding that retail traders don't move the market, right, which is, I'm sure most retail traders are trading in between this range, trying to catch this impulsive move. All they do is add liquidity, and the market makers can go ahead and step in and collect orders and have the market continue moving to the side that it was bound to go. So having an understanding that these traders here are trading in between this range, the logical place where they're looking to take profit is at this top range. They weren't given the chance to. So where's the most logical spot to put their stop losses? It's right under or in the next available structure. Now, in order for you to see the next available structure, you would have to zoom in to the smaller time frames. I don't use like the 5-minute chart frame to make any biases, but to find a structure, you know that there's a structure at 78,800, right? Market comes down, and you have a nice little double swipe. Now, we did say that we were going to start taking live trades. The only reason I'm doing this without Dave, guys, we don't tend to do anything without each other. Sounds pretty cute, I know. Um, just because I'm taking a live trade, we don't tend to trade the weekends. And I said, hey, why the hell not? I'm in this trade. If I end up winning or losing, I don't care. Once again, something where me and Dave are really big at is transparency, and we want to make sure that you guys are aware that we're not just talking out of our ass. We're taking these trades the same way that we break them down, and we're not here just to show you guys, just to be gurus, you should say. We're actual traders. So with or without this, with or without the YouTube or Traders Creed just in general, me and Dave would still be chopping it down, breaking down charts and entering trades. So yeah, let me continue with this breakdown here. So you have a break of structure, you got an impulsive move, you have a range, we have a trap right here, and then you have the final phase in our setups that we look for, and that's the manipulation, which is what's happening now. And I am looking to go ahead and long and taking two positions. Now, the reason why I wanted to hop on now without Dave is because now in the current moment, I'm actually entering this trade, and I notice a nice little break of this neckline here, in which I get a nice little risk to reward here. If I take it now of I'm gonna give it a little more space, guys, just because it's Sunday and I know the spread is kind of crazy right now. So I'll put it at 78,700. And what we look for is to take profit at midpoint. Midpoint of the range would be right on top of these trap traders here. Let me take this out. So this right here is midpoint. And if I take that position now, I am looking at a pretty about a 1 to 2. I know once again, guys, that we tend to keep our stop losses pretty tight. So if you guys want to play it right now, this would offer you a 1 to like 2.50. But once again, I'm giving it space just because of the spread that's it's Sunday right now, so the spread's horrible right now. So I'm giving it a little more space than I should. But if you're taking it with your stop loss being tucked in right under the structure here, you're looking at a nice 1 to 2.50, you can say. And then what we tend to do is we tend to take two positions, one targeting the midpoint, and then the next one targeting the top of the range. So if you guys take that, you'll have a nice about 1 to, you can say a 1 to 4. And yeah, I mean, at this point, guys, I have a total of 1, 2, 3, 4, 5, 6 confirmations. Oh, so sorry, the midpoint's not a confirmation. It's just something that I'm right there. The more confirmations you can add to your bias on why this is a good trade, the better, the higher probabilistic of the trade working out for you, right? Because we only look for high probabilistic trades. Because if we're taking these low probability trades of trading in between ranges, this doesn't make money, right? People who are transacting here are just retail traders. I'm not following what retail traders are doing. I'm following what the big boys are doing. And so they're leaving the footprint of what orders they're collecting. At this point, they're collecting, if you're a buyer, your stop loss is a sell order or a willing seller. Now, if the market makers are trying to transact at the cheapest price possible, it's because somebody is buying something at the cheapest price possible because they think future price would be a bigger amount. So having an understanding of what orders are being collected, you can come up with the bias to understand what the big boys, I should say, small hedge funds, not retail traders, are doing. Because these movements here are nice and quick. And in order to move the market this amount, it's not retail traders that are making these moves. It's small hedge funds, financial corporations that are transacting at these levels. And what's another thing I can add to my bias? I had drawn this up earlier. Give me 1 second. God. Oh, another thing that I like here is this level right here is at a round number, 79. And the big boys love to transact at these levels. Now you may ask yourself, like, why do they like to transact at these levels? In all honesty, you don't want to come and create like some type of understanding of why. It doesn't really matter. But in which ways they make sense is that if these small hedge funds are trying to transact these orders that I have no idea what orders they're trying to transact and complete. They're going to transact at levels where most orders are being filled at, right? And that's at round numbers because why would they want to transact at 78, 950 or something like that? It just doesn't make sense. So they will uh, transact at whole numbers. Now another level that I see is the 79,500 level. So let me zoom back out to the 1 hour time frame here. And another level of importance is the 79,500. Oops. I'll make this one dotted, guys, so you guys know that this is a minor level, not a major level. And the other one is at 78,500. And these are little things that add more to my bias because I know that um, the big boys are transacting at these levels, right? And it all correlates to our price chart. So if you take this position here, right, you can actually take a total of 3 positions. Now, and in the time frame that they'll play at, I can't give you like that amount. It could be a whole week, it could be a couple of days. But what you do know is clear structures of where to take profit, where you have this midpoint, you have this range, and then you also have this other area that we're looking to go ahead and transact at because we know that there is sellers, willing buyers up here. Because if these guys are selling, their order is a willing buyer, right? And what we're trying to do is we're trying to transact at the highest price possible, understanding that buy orders are being collected. So we know there is a lot of liquidity sitting up here. And if the market is to come down and maybe take out these lows down here, then they're going to do it um, very discreet, and it's not going to happen right away. And because me and Dave noticed that none of these highs have been invalidated, we asked ourselves, you know, if if small hedge funds are trying to transact at the best price possible, and none of these highs were invalidated, then we know that there's a lot of liquidity sitting up here. And we say it almost every other video that all the market is liquidity following liquidity. So you need to kind of figure out where there's liquidity sitting and come up with a bias that matches the footprints that the small hedge funds and financial corporations are leaving. And this is a footprint for me because this right here, this massive amount of buying isn't coming from retail traders. Look how small these candles are. They're coming from small hedge funds, big financial corporations that are trading. So I'm going to show you guys me entering the trade live, just so you guys can see that we put our money where our mouth is. And I had my stop loss here a little low because I actually entered this on Friday once I noticed a neckline being broken. But now I feel safe enough to actually move up my stop loss and put it up here. I'm having 2 take profits, one at midpoint, where you guys see right there, and the other one at this top range, right up here. So I'll actually put my bigger position to take profit there, and then my other one at the top range. And that's pretty much it, guys. If you guys are going to take this trade, just make sure you guys are aware all the risk involved, and please make sure that you guys manage your risk properly. All me and Dave are here to do is just to give you guys trade ideas and reasons why we enter and things that make sense. Um, And yeah, that's, I mean, that's pretty much the, the best we can do. We're not here to hold your hand. We're here to give you information on why we're entering trades, because at the end of the day, we're traders. Um, and yeah, I hope you guys enjoyed this video. I know that Dave isn't here, and we both tend to be here, but I hope you guys got some valuable information for me, just giving you guys some ideas. And if you guys have any feedback, go ahead and feel free to reach out to me. You guys have a nice day, and make sure you guys trade safe. Have a good one.